The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Tuesday morning. I hope everyone had a great long weekend. We kick things off trading. We're negative by 7 points coming in too. We got retail sales on Thursday. Keep in mind it's Tuesday. That's only 2 days away. We have some earnings. We have Goldman and Morgan Stanley out with their numbers. One is up, one is down so far this morning. We get Netflix earnings on Thursday as well. We'll jump into it. We got New York manufacturing with a negative number in a big way this morning at 8:30. S&Ps, though, negative, pretty marginal action. As you look at the overnight action into this morning, we're chopping around with a range of about 10 points in the S&P, trading down 7 points. NASDAQ 100, quite a week last week to the upside for all the indices. NASDAQ the most this week. We kick things off down about 0.3%. Dow off 0.3% as well, and the Russell off about 0.2%. Crude back above $80, up 75 cents to 80.60. We get the gold contract backing off a bit. We hit 19.31 Sunday evening on gold. Check out gold on a daily, right? You talk about a run, man. From 16.18 at the beginning of November, you're up $300, which is almost a 20% acceleration of the price of gold. Now we're accelerating somewhat right above that 618, but that's an area we're coming into right now of the entire move lower from March of last year to the lows of 16.18. Back to a 15-minute chart. We jump down to notes and bonds, a little bit of lower price, higher yield. You see the volatility. Friday, we are up to 115.15, so we're actually lower by basically a full point. We're negative by 6 ticks, but that was early Friday. We traded down into the close, and we're a little bit lower. We were just at 114.10, though, on that 10-year, so you see the volatility jumping around. That's putting us right now at about 3.54% the yield on the 10-year, and you jump over to the VIX, right near 20. We were down at 18 on Friday, man, 18. So decent elevation on the VIX when you look at a market that's kind of flat, which is interesting, right? Yesterday, the VIX is about 19.15, so a lot of volatility coming in compared to where we were last week, especially with the markets barely down 5 points right now for the VIX. We jump over to the currencies. Dollar index, 102.10. You're negative by 30 ticks. And there's your daily. Quite a fall off, man. Lower lows consistently on this since when? January 6th? That's 11 days, man, that we've been trading lower. 102.11 on the dollar. We jump over to the euro US dollar. As you'd expect, higher price, 108.5, man. Crazy. In terms of make it down to 95, and just like that, we're back nearing 110 in the euro US dollar. Jump over to the dollar yen. Yeah, man, that is just quite a decline. Look at those moves. 1, 2, 3 dramatic moves to the downside, bringing the yen from 152 almost to about 126 this morning. We're almost flat at 128.54. And what are we jumping around to? Let's jump to that New York manufacturing number, man, because it is a big one on the downside. Yes, there it is. Yes. Nope. One more time. Where were we? Shame on me. There we go. Got to scroll back up to the top. New York manufacturing activity plunges to the lowest since May of 2020. So anything negative points to contraction. This number comes in at minus 32.9, down from about minus 11 the prior month. Lowest levels since the early months of the pandemic. So manufacturing, man, no matter what. Now, there are pockets of this economy that are doing well, that are not doing well. Manufacturing, not doing well, obviously, especially with those numbers. But this was way below. Yeah, they put it. The figure was more than twice as weak as the most pessimistic estimate in the Bloomberg survey of economists. Yeah. So very harsh numbers, surprising to the downside. It's kind of probably the kind of contraction you need in this economy to go with some of the cooling inflation. Contraction in 5 of the last 6 months. Not surprising. Underscoring the depth of the pain to the manufacturing sector as Fed hikes interest rates. Okay. Jumping around to what else we have, let's get into Goldman and let's get into Morgan Stanley. Goldman expenses surge on pay and add to the pain of shrinking revenue. You jump over to their chart this morning, and Goldman is actually lower. You're going to see Morgan Stanley's higher. Goldman's down about $12. And Morgan Stanley's up about $3 to $4. You see the acceleration. But Goldman, the expenses, costs related to pay declined on a full-year basis. But, shares are negative this morning. Compensation, 16% higher. Quite a number on a yearly basis. Your compensation going up by almost 20%. Leadership was too conservative with its compensation set aside in the first 9 months. And their negative operating expenses over $8 billion, 11% higher. I'm sure that includes what they're paying people. Return on equity, 10.2%. Yeah, look at that. So they set 14 to 16% return on equity earlier in the year, and they come in at barely double digits, 10.2. So that's probably part of the reason there. Asset and wealth management business, $13.4 billion, down 39% from a year earlier. Revenue from trading, 4.76. So they beat versus the 4.5. But yeah, some big numbers there. And you jump over to Morgan Stanley. Wealth management hits a record. Sort something there. Hopefully we're all right. The unit had $6.62 billion, up 5.9%, that number. And yeah, big numbers from then. Look at that. Assets in the unit, the bank with new loans, $4.19 trillion. They have a long-term goal of $10 trillion in client assets. That is quite a number, man. So they're trading higher this morning. Be interesting to see where they open with Morgan Stanley. Look at that. What did they just have the conference call? Something's going on as they just jumped even $1.50 since I was on the air at 9 o'clock this morning. Markets in negative prices. We jump around to some of the other banks that recorded last week. Bank of America, you see their volatility on their Friday numbers actually finishing the session higher to 35.39 as the markets had quite a day. Wells Fargo, yeah, they're marginally lower this morning with the market. Citi, similar action. So Goldman and Morgan Stanley. We jump over to some of the other. Netflix. So Netflix has their numbers on Thursday. We take a look at this thing, man. You put it on a daily, quite a run from about 165. You were chopping around at that price level, maybe 170, all the way through July 15th. The acceleration really began just prior to the earnings on their last time around. And pretty remarkable, right? You buy before the last earnings, and you're buying in at about 210, 215, we'll call it, maybe even 225, anywhere in that area. You're up about 50% from that price, just from one 3-month earnings season to the next. Point being, they're going to have a lot of expectation coming into this earnings season because last earnings season, yeah, you're up nearly 50% on this equity over that period of time. I'm going to sneeze one. Excuse me, folks. Hopefully it's just one sneeze. I think it is. But Netflix, you jump over to the Analyze tab. Now, they're going to recalibrate things on the market open for the pricing. But you can see immediately that the January 20th, you're talking about a $32 move. So about a 10% move in either direction. This is as the Friday close for Netflix on their numbers on Thursday. That's about a 10% move if you want action through Friday, keeping in mind it's Tuesday. So you got 4 trading days this week, not the usual 5. I found myself thinking today was Monday, having a nice long weekend, and then I had to realize that Goldman and Morgan had their numbers this morning as I woke up early because it's Tuesday. It's not Monday, folks. Markets fading a bit right now. You're negative, I say fading the losses, trading higher as that number negative by 3 points to about 4,015. You're pushing pre-market highs right now in the S&Ps. Stay tuned, folks. We'll go over what we have going on. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got a chart of Apple up here. Apple up about 50 pennies. You see the run. Wonder if it may be tied. Not sure if it's super new news, but hitting CNBC at least, hitting news waves that they have new Macs with its most powerful chips yet, as they announced on Tuesday. Announced new Macs on Tuesday that can be purchased with those chips, the most powerful Apple silicon chip yet, as they are covering everything there. And Apple catching a little bit of a bid, although basically no volume. So we will see if that matters on the open, and you have to chuckle a little bit. Other news out there is you have Disney. Now, interesting, Disney. I was looking for any potential news on Disney because they're somewhat trading higher as you're up, about $1 right now. So you're up 1% when you have the markets in red territory. But they are defending Iger, not surprising. Says activist Peltz has no track record in big media. Disney defending Iger as Peltz is going to go for a board seat. They're saying to not vote for Peltz. He laid out the case last week. It's a pretty reasonable case, but easy to make. But nonetheless, we'll see if it goes through. Sometimes just not even getting the board seat, right? Those activist investors, maybe they'll get some type of concession. The only thing is that, man, if Iger wasn't there, maybe they'd really have more possibility of making headwinds. But I think the board and Iger and what they want in that transition, with a new guy that's executive chairman, also executive chairman of Nike, tough to make the case that they might be able to get that done over the next 2 years. But we will see, as that's going to be quite a role that they have to fill. All right, jumping around to what else we have going on. Yeah, so you have Fed president speaking today as well. I was just pulling this up as, let's see, what time is he talking? I think he talks New York Fed President John Williams. He's talking at 3 o'clock, I believe. He will be speaking. So look for anything, maybe headlines in the final hour of the day there. And we also get retail sales on Thursday this week. So you get Netflix earnings Thursday. We'll go over some of the other companies that have their numbers on Thursday. Retail sales on Thursday as well. And that, of course, ahead of, we're about 2 weeks out from a Fed meeting, folks. You're talking about January 31st and February 1st. All attention will be there. We'll come into the quiet period probably beginning of next week or so. And you're going to get some comments potentially today. Not sure if it'll drive the market. Okay, talking about other articles that I have up there. Taking a look at. We talked about Morgan Stanley. We talked about Goldman Sachs. Let's talk about a little Microsoft. We talked about this last week, but now it comes up that Microsoft is going to add the ChatGPT to Azure cloud services soon, in talks for that further investment. We talked about it last week. I think it was something like $10 billion. They'll get 75% of the profits until they get their investment back, at which point in time they will own 49% of the company. Not a bad deal if you assume they're going to be able to make slightly more than $10 billion of profits at any point in their lifetime. Then it's all just gravy on top. And this company seems like it might be nice to be owning the gravy on top to the tune of 49% of the company. And this just got me thinking, now it's going to add the OpenAI ChatGPT to its cloud-based Azure service. So what that means is that, number one, you're going to be able to use that if you use their cloud service on your service. And number two, in my head, it just thought, one of the things, building a website, right, doing those types of things, you could see how this one bot, there's no reason why it just has to be a chat bot. Why can't it be a chat bot that builds a website that's cloud-based on Azure, right? And going beyond that, just the Google search function. But search, you really want something. If you think about it, Google right now, you search something, then you scour the web, you combine all of it to get a full circle of what you deem to be the best representation of the information available, right? ChatGPT is only trained to 2021, okay? So what was interesting was I was, of course, being in the business I'm in, talking about the markets. I think I put in one of the requests that said, write me an article on the possible impacts on the possible price of the gold contract depending on Federal Reserve interest rate policy in the coming year. And I wrote that at the end of last year, right? And it spit out something that talked about zero rates and maybe the Fed will hike. And that is when I actually discovered that it wasn't trained through 2022. So to get to the point, ChatGPT 4 is going to be coming out expected the late part of this year, okay? And some of the graphics, and folks, it's technology, okay? It's difficult to understand the growth that takes place in terms of the exponential growth and how that happens. But this is the image, and I don't know if it's to scale, folks, okay? But you're talking about a number where GPT-3 has 175 billion parameters, okay? Now, GPT-4, it's all rumors, but something like 100 trillion parameters, okay? Or potentially 130 trillion, I saw somewhere. Chat GPT-4, okay? And let's get what that means, because I was reading about this. Oh, come on. Yeah, generative pre-trained transformer. So generative pre-trained transformer. Say that one 5 times fast. And this is the difference, folks. And you can see if that's the processing power that just took the world by storm, the internet by storm, and had millions of users instantly, think about the potential impact of GPT-4, and then think about the fact that cloud-based services are going to be able to interact with you on a human basis, like you're talking to a human, and meanwhile, they'll be able to do everything basically instantly setting up on that cloud server. And that's with my very basic understanding of how AI, cloud, and all the above work. But it's pretty cool to think about on that context. Now, I'm not sure what's going on with Microsoft, if maybe they have some news this morning. They get a downgrade. Guggenheim going after Microsoft. 212 is what they put as a target. Maybe they don't like the investment short term. And if you're going out a year or something like that, yeah, probably not spending $10 billion there. Quite a price tag for a company that's producing chatbots for all intents and purposes. But long term, you can see that impact when it's going to be up on a cloud service. As someone that runs a website and interacts, and we have Shopify. I mean, the beauty of Shopify, folks, is that they made it pretty simple to run a website, build a website, take payments, ship products, etc. And with an OpenAI chatbot in Azure, you could see how that would have an impact. Microsoft with some volatility this morning, down to 236, but you've gotten back $1.50 of that already, as the market seems to be inching towards flat territory so far this morning. We're going to bring Kevin Hincks is on break this week as well. Where is he? He's in beautiful sunny Florida. We usually talk to him this segment, but don't miss Fast Market, folks. Every day at noon, they are still live over there, even though Kevin's going to be enjoying some of the sunshine. We get some cool weather. You Floridians, you enjoying this weather? Pretty cool weather, enjoying it. Enjoy it while you can, because, man, we got some heat coming, I'm sure. All right, what else do we got? Yeah, you have wouldn't be a show if we didn't talk a little bit of Elon, but he's in the court battle, and Tesla tweets could cost him billions more in court. So it'll be interesting to see where this thing settles. He tried to get, the head of the Saudi Wealth Fund in there to back him up. That really didn't go well in terms of the Saudi Wealth Fund chief not really into flying over here for an Elon subpoena to testify. But nonetheless, you jump over to Tesla shares this morning and you're catching a bid. You're up by $3 as it's pushing 125. That's the highs of last week when you look at where we're at. Of course, off the lows of almost 100. But as I was saying last week as well, be careful. Percentages on small numbers can be deceiving, folks. Even taking the most recent acceleration for Tesla, which started at about 200 on December 1st. You're only talking about 6 weeks ago, okay? And even just taking the lows around where you were in terms of the candles at 108, not cherry picking the low of 101, a 382 still gets you to 142, almost $20 higher from where we're at. Stay tuned, folks. S&Ps go positive as we wait.
Building wealth
3 minutes.
trading in
We'll be
the
right back.
stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got the S&P rolling into positive territory. Excuse me. You're up at 4,018, basically flat. NASDAQ 100, you're negative by single digits, now off by 9, 11,596. Dow off by 57. Russell is flat. Let's jump over to Goldman Sachs and Morgan Stanley. Goldman off about 2.3% right now. You got Morgan Stanley up 3.9% right now. All right, I'm going to jump a little gambling here. Why not? Quite a NFL weekend. Quite a bummer for the Bucs last night. Tom Brady. Be interesting to see what he does. Seems like he still has it in him, man. to say the least. Tough season for the Bucks. Tough game last night for the Bucks, and they got manhandled pretty good last night. Credit to the Cowboys and Dak. Dak really got it done. But what I'm going to talk about is some gambling, and I'm trying to find the tweet. I have it. No. Forgive me. Okay, I'll pull this over. I thought I had it up here. Here we go. Okay, so the Chargers and the Jaguars. If you weren't watching, the Jaguars went up. No, excuse me. The Chargers and the Jaguars, we'll start over. The Chargers, who were the favored team, went up 27-0. At that time, a bettor, and this is confirmed by DraftKings Sportsbook, and it's a whole different conversation of like how they even let this get out or why they're doing it or why it came out in the first place. I think it was posted by somebody at first, I think Bleacher Report, and then it was picked up and confirmed by journalists because it's so sensational that a bettor, and this happens sometimes. Now that you have so many competing sports books, they highlight certain bets, and I've read articles about this one in particular over the weekend and how it talked about usually they would at least make sure that the person who made the bet was okay with the sports book maybe tweeting it or doing something like that. Now, the DraftKings Sportsbook did not do that, okay? They weren't promoting it, but it did make its way out. And this is the bet. So what they did is they took the money line when the Chargers were up 27-0, and they placed a wager of $1.4 million to win $1.411 million. They were risking $1.4 million to make $11,200, okay, at the odds of minus 12,500, okay? So I think that's 125th is what it would be in terms of the money that they're getting. 125th, right? I'm gonna make sure that that's the case because I'm gonna go over how crazy this bet is, even aside from the risk in terms of the amount of free money that you can get right now with interest-free return, because that literally has to be examined in part of this. Yes, that's exactly what it is. So 1.4 million divided by 125 is the 11,200. So they're betting $125 to win $1. That's the other way to think about it, okay? Would you make a $250 wager to win $2? Would you wager $1,000 to win $8? Okay? Or $10,000 to win $80? And that's what they did. Well, here's the obviously, I can't imagine whoever wagered that. Now, here's the thing. There's plenty of people who have that kind of money on DraftKings because professional gamblers nowadays, especially on the fantasy sites, if you're a top professional, what you're doing is you're making a small percentage every week by playing a lot of cash games. Yes, you're going to play tournaments, but you're playing so many entries on tournaments that you're almost covering the board. You're at least covering the board with the best statistical plays. You're risking sometimes, 200, 300 entries in specific tournaments. Okay, covering the board. So even when you hit big, it's an X return. So what they do is you can have extremely large weekly outlays of $1 million because you're diversified in some fashion where usually even your winning weeks, your losing weeks, right? You're going to deviate in 50 grand, 100 grand, 10 grand, whatever those numbers are. And I don't know them that well, but people have large sums of money, especially gamblers, in that game, and there's plenty of them, man, because there's so much money in fantasy, the way it blew up for recreational bettors. But here's the last part of this, which is crazy. Right now, let's just assume a 4% guaranteed rate of return. And that's pretty close. I mean, what's a 30-day CD? It might be higher. The 90-day CD is definitely higher in terms of the money. 4% of $1.4 million is $56,000, okay? Per a day, that money is earning risk-free $153. That's basically 2 months of risk-free return for putting it all at risk for a day. When you think about it in that context, man, oh man, let alone the better investments. So, never do anything like this, folks. That's, even if it was a slightly plus expected value bet, I don't think it's worth risking $1.4 million if you have $1.4 million for $12,000. Because if you have $1.4 million, is $11,000 really worth it? Is that going to change anything? No. Is losing $1.4 million going to change anything? Yes. That matters in the expected value of life. Make those expected value of life translations into that same equation, folks. Yeah, pretty remarkable, right? Jumping back to that, pretty remarkable. Okay, seeing what else we have pulled up here. We talked about OpenAI. We talked about Disney. And the earnings we got coming up, Morgan Stanley. Well, we'll jump around a bit. Yeah, how about gold? So this one was on the opinion on Bloomberg this morning, yesterday, I guess. But taking a look at gold, it's pretty interesting when you start talking about getting opinion articles that gold is getting its glitter back. In today's markets, there aren't many other things you can turn to as a long-term safe haven. You know, the tough part about that, folks, is that when you take a look at the dollar index, right, and look at, we're down again 43 ticks today, and even down 43 ticks today, the gold contract's still negative $5. Boy, this has been quite a run. You know, there's November 2nd. You just went from 114 to 102. Keep that in mind. Okay, November 4th, November 3rd, there it is. We jump to the gold contract. There's the same days. Gold contract goes from 1632 to 1916. So it can happen. And it's a very real deal that potentially the Fed needs to maintain where they are. Maybe they're serious and they're going to stay longer, higher for longer. But this is why, and we talked to our man Teddy Kegstad tomorrow, you know, if you don't trade Forex, folks, try out his newsletter, because Forex is so important right now, especially when it comes to gold, and it's mattering with yields in terms of where the Fed is on their interest rates. But if you're into the gold contract, I'm sure you know this to some degree, but you better be expecting some type of bounce, I would say, in that dollar index right now, because the dollar just went from 113 to 102, and in that time, gold went up 20%. If you get any reasonable pullback higher, you know, a pullback of the move, a bounce higher in the dollar index, and that's going to hit the gold contract. And even the gold contract right now is right at near the 618. And you trade up to a price point of, what, 1931, and we're down about $16 from that high. And as I said, you get a little bit of weakness in the dollar. And, man, you jump over to the yen. That's been quite a one-way trip to lower price. And, you know, if you're looking at trends, and Forex trades in trends sometimes, man, those trends are well intact right now. Doesn't mean they're going to stay, but you saw what they did on the way up, and there's no reason to doubt that they are not still intact right now with how they are acting. All right, we jump back to the S&Ps, negative by 4 points. As we come into this break, let's check out Apple. Apple flat on the session right now. We check to the banks with their earnings. Morgan Stanley continuing higher, up 5% right now. Goldman Sachs negative by about 2.5. Stay tuned, folks. We'll go over what else we have going on this week. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps negative by 2 points right now. We jump around to some of the FANG stocks, as I was right before the break. Apple slightly in the positive right now. They're coming out with new chips for their MacBooks. You jump over to Amazon shares this morning, down about 0.7%. We jump over to Microsoft, we talked about. They're down about 0.4. We jump over to Google, down 1.9%. I will tell you about Google, folks, every single time I'm saying it, but I'm so amazed. So my son's about to be 2 in 2 weeks. He has a Fire tablet. We're pretty good with keeping him to about 45 minutes of tablet time a day. Sometimes he gets it in the car. A lot of that tablet time is good tablet time in terms of apps, learning, singing, alphabet, letters, words, drawing your letters, your numbers, etc. All he wants to do, mostly, is get onto YouTube. That's the only thing he wants to do when he's 1 year old. That tablet has Netflix. That tablet has Disney. That tablet has a bunch of shows already downloaded on there. It has a bunch of games that Amazon Fire HD it comes with. It's something like $3.99 a month with a year of subscription if you buy a kid's Fire tablet. And if you are looking for one, folks, what I will say is we had, for Landon, who's 5, he had one prior. I think if you break it within 2 years, because it comes with a stuffed border, a padded border, they'll fix it for free. It might be a year. But that was the selling point. Because kids break tablets all the time, man. If you don't have kids, if you're not around them enough, they just like to stand on the tablet sometimes, you know? It's just how, especially a 1 year old. But nonetheless, all he wants to do is pull up Google. I'm like, man, we stream on Google. I'm on Google all the time. It's such a great platform. You see the way kids drive it all the time. It's quite a force, and it's going nowhere, that YouTube, and that's only a small portion of what they do. But guess what? We also talked about over the course of this program Microsoft and how they're coming for Google's potential search advertising monopoly. And yeah, that one probably bigger impacts, at least in the short term, in terms of Google's share price, if that is real. So there's always two sides to any story. All right, what else are we jumping to? How about China? They got less people this year than they did last year. Population drops for the first time in decades. If you're not familiar with population estimates, birth replacement rates, child birth rates, etc., pretty interesting to see how it's going to break down. And I was looking at one. Let me see if I can find the chart I just had pulled up. Yeah, here we go. So this one is from 2016 even, okay? And I'm just Googling stuff here. Yeah, this one's way off, though, because they put China tanking here. Interesting how it goes back. This is from a BBC article in about 2016. Right now, you got China population, I believe, at about 1.41, in India at about 1.408 billion. That's what Google's telling me right now. But what did come out over the weekend is that you have China's population dropping for the first time in decades. The mainland population, excluding foreigners, fell by almost 1 million people to 1.41 billion. The country had only 9.56 million births and 10.41 million deaths for 2022. I was looking at this a lot this weekend, and it is interesting to see how India, number one, is going to sustain higher, but how some Nigeria is breeding like they're going to catch up to everybody over the span of 50 or 100 years. New births on the mainland fell by 13% in 2021. to 10.62 million babies. In 2022, new births fell by 22%. Be interested to see how that all plays out with COVID, though. Obviously, China locking things down pretty substantially. I'm sure that has an impact on things. I had some other data on a few different articles pulled up here. So they do this every year. Yeah, every year China puts it out. India, however, only collects population figures every 10 years, kind of like the census in the U.S. And their last census, for India was scheduled for 2021, but it's been pushed back because of COVID. Yeah, long-term UN experts see China's population shrinking by about 109 million by 2050. It's only 27 years. And that would be shrinking by 109 million. And at that same time, China's birth rate last year, 6.77 births per 1,000 people, down from 7.52. I mean, those are drastic drops on a yearly basis when you think about long-term impacts. The number of Chinese women of childbearing age, and that government defines it 25 to 35. It's an interesting age to define it, but maybe a majority take place over that time span, fell by about 4 million. Yeah. So long-term, interesting to see how that plays out. And China usually has a very long-term approach to things. You know, it'd be nice if our politicians, this is not political in either way, right? Could be planned for your kids 25 to 50 years down the road. And that goes both ways across the board, man, because that just doesn't happen right now, you know? And China, that's the risk, is that they do. I read something, and I think that was talking about AI articles. China's just blowing us away. And you see the potential for AI with something like ChatGPT. So that's something that we should really be able to, you know, be willing to spend some capital on, because AI is going to control the world, folks, whether we like it or not. All right, what else do we have going on? Let's check how some of the banks are trading this morning off their numbers. Ooh, giving it back a little bit. Bank of America, they trade lower on the open, down 2.3% right now. JP Morgan, yeah, all of them off 2.1. Wells Fargo, Citi's the only one. They were coming into the opening bell higher. We check out Goldman Sachs off 3.6%. Look at this, all of them. Morgan Stanley, they're holding up well. Yeah, they're going to control $100 trillion of equity in the near future. Why not? Morgan Stanley up almost 5%. Let's see how Netflix. So Netflix has their numbers. Interesting. On Thursday, we jump over to the Analyze tab. So you're looking at about a $30 move price for the numbers on Thursday, $32.62 if you want action through the entire weekend. Through Friday. And they're off about 2.2%. Yeah, and as I was saying at the beginning of the program, man, this stock's up from about $215 on their last earnings number. So you're up $115, $110. You're up about 50% since their last numbers. That's some lofty expectations over that time. Now, the market up during that time as well. You've basically closed that entire gap, right? That gap had a low of 333, and we got to a price point of 336 last week. Good things probably to come from Netflix, but that's quite a lofty expectation when you are now basically double. You're up 100% off of where you were at the lows, and you're up about 50% from where you were a few days before their last earnings season. We jump over to Disney. Disney up about 0.4%. Still struggling along the bottom as they deal with 2 years under Iger and then finding a successor after that. Let's see how some of the airlines are doing this morning. You talk about a run, man. American from 12 to almost 17. Delta down about 0.2, 38.11. We jump to JetBlue. JetBlue shares up to 8.19 from 6.18, but you're negative a bit this morning so far for JetBlue. What else? We got retail sales on Thursday. Macy's shares just jumping around to some, down about 0.7%. Gap down 1.3% so far. Jump to the most retail of all, Amazon down about 0.8%. Walmart holding up pretty well, up about 1.10%. Target shares, that was a Target this weekend. It's pretty interesting how Target is almost a social outgoing. Yeah, I guess that's a reflection of the life you live, right? But there it is. Target flat today, 164.65. Stay tuned, folks. One more segment. We'll be right back in 3 minutes.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P up by 4 points right now. NASDAQ 100 in the green by 13. Dow in the red right now, off about 153 points. And jump back to the China story real quick, because just a couple more tidbits in terms that I didn't get to. I was jumping around. Every article had something interesting that I was reading this morning about China. This is the Bloomberg piece that I was reading. And the interesting thing about this is how quickly this drop-off has happened, even versus expectations. Now, you take a look at the chart. This is the chart of births in China versus deaths, okay? And look at the birth rate since 2016, this dramatic drop-off. Now, even as recently, okay, as 2019, the United Nations was forecasting that China's population would peak in 2031 and then decline. But late last year, they revised that estimate to see a peak at the start of 2022. 3 years is all it took for that dramatic of an impact. And yeah, 62% of the population were of working age, which China defines as people 16 to 59, down from 70% a decade ago. They have an aging population. So long term, just interesting enough, that's going to be an interesting one to see how that happens. Because that graph in itself, the birth rate with an increasing death rate and the birth rate falling like that, in 2017, you had 17 8.9 births. Is that per 1,000? Per 10,000? It probably is. Nonetheless, interesting stuff. Okay, let's talk a little bit of crypto in the last segment of the program. Silvergate posted $1 billion loss after FTX sparked dramatic run. Some of the numbers in this, man, they had assets in there of $12 billion the preceding quarter. Customers withdrew $8.1 billion of the digital assets, but guess what? It's a bank, so they're going to be okay. And we jump over to Bitcoin. Bitcoin shares, that stock not going to be okay, down about 91%. But people who had money with them, if it's FDIC insured, yeah, it's going to be okay. Bitcoin, though, how about it? Up above 21,000. Thanks so much, folks. Live programming all day. Have a great Tuesday. We'll see you back here tomorrow morning at 9 o'clock. Have a great one.